Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide divorce mediation and valuation services in St. Louis, Missouri. Today, we'll discuss valuations for financial reporting with Mark Zyla. Mark is a valuation expert in Georgia, the managing director of Zyla Valuation Advisors, which is an Atlanta valuation and litigation consulting firm. Mark is also the chairman of the Standards Review Board for the International Valuation Standards Council. He also was the primary author of the education program of the AICPA and the Royal Institute of Chartered Surveyors for the Certified in Entity and Intangible Asset credential. This is the CEIV, which I believe most valuation professionals are aware of, that goes towards certifying valuation experts in valuation for financial reporting purposes. And it's a fairly new credential. The other thing about this process is that, do business owners typically know that this is something that's required, or when do they find out? When does somebody tell them? Because they get all concerned about buying the company and incorporating that acquisition. When does this process come into play?
Yeah, if they've made a lot of acquisitions, they probably have gone through the process previously, so they have an idea of what the process involves or what is needed. If it's a company that doesn't make a lot of acquisitions, oftentimes they may be aware of the concepts, but certainly before they go through their audit process, their auditors are going to mention to them that they need to identify what actually was acquired and measured at fair value. And so they'll either do it themselves, and then that's possible, or if they don't have that expertise, they'll retain an outside expert that specializes in that type of valuation.
And it kind of makes sense from a lot of perspectives, because I think business owners will always say, well, yes, I have this equipment, but what about my people? What about, the other stuff? What about me? What about the name that I've built? Things like
Sure.
that. What if there are patents and trademarks? Is that something that can be dealt with within this valuation?
Yeah, those would likely be considered identified intangible assets. So if it adds value, if it can be separated and either sold by itself or in conjunction with other assets, then under the accounting standards, it needs to be valued in a business combination.
This is good. So another area, I think I went ahead of myself, but that's okay. It was good information.